Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the March 20th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. This is the vernal equinox edition of Basis Loaded. Spring is upon us. The tulips and daffodils are up, currently frozen, but they are up. What better way to celebrate than with the latest? From the NDPSR report, we'll start with butter. This butter number coming in at 286.40 represents a plus 5 to the CME 1 week average of 281.15. The CME was up 1 here on the NDPSR, up over 4 week to week. So we had an expansion of basis, plus 5, really nice basis, well above our expected 2-cent positive basis. Last week, we traded 8 loads at the CME, so not a lot there to pull basis down. Volume on the NDPSR a little bit short of our expected 3.5 million, but respectable at 3.3. And when you combine that with the 5-cent positive basis and 3.3 million pounds on the NDPSR volume, I'd have to call it a win for the butter manufacturer. Next up is cheese. We'll start with the block variety, 159.81. That's about a half cent over the CME 1 week average of 159.40. Now, half a cent, of course, is a drastic change from where basis in the block has been running as of late, and even below our expected 2 to 3 cent positive basis. At the CME, to achieve that 159.40 level, we were up 7 cents week to week. Then the following week, we were down 10. So this was a short-term peak in the block price. You would expect lower basis on a move such as that, and that's exactly what we received. To add further pressure to the block pricing, we traded 13 loads at the CME last week at the 145-ish level. So you had some substantially discounted prices going in, along with the CME++ contracts that exist out there. 159.81, all in all, a nice price considering the CME average. And at that elevated level relative to current CME prices, the manufacturer was able to move just short of 11.5 million pounds, which of course is a million pounds short of our expected 12.5, but compared to the last 4 weeks on the NDPSR, 11.4 seems like a big win in moving volume. In the barrel, 165.08. Our 2-week average at the CME is 162.40, so I'll call that a positive 2.5 cent basis. Again, big volume at the CME last week, 23 loads. So after breaking 20 cents on the CME, last week we finally caught a bid and found some volume, traded 23 loads. Again, that weight is discount to the 2-week CME average that the barrel forward contracts were based on. So that probably went a long way to pull that basis down to the 2.5 level, well below our expected 3 to 6 cent positive basis. However, at 165.08 on the NDPSR, the manufacturer was able to move almost 13.3 million pounds. So good volume on the NDPSR at what appears to be relative to current CME prices and elevated value. All in all, I'd have to call that a win for the barrel manufacturer for this March 16th period. Up next in the whey, this week's whey price came in at 48.56. That is a plus 4 to the CME 1 week average of 44.85. The CME is moving lower. However, as we would expect, the NDPSR begrudgingly hanging out in this high 40s level. Just as on the way up, it took a long time for those higher values at the CME to find their way into the NDPSR. The converse is true on the way down. Lower levels at the CME are taking a long time to find their way into the NDPSR and way begrudgingly stuck up at this 48.56 level. What's interesting is that we, even at that elevated level, still had 5.5 million pounds in sales. So the manufacturer still doing just fine, moving away at an elevated level with sales a million over the expected 4.5 million pound level. What's interesting is on that NDPSR volume, we're not getting any help from the CME. Last week's CME volume, 0. Week before that, 0. So not a whole lot of interest at the CME, and we're certainly not seeing a big increase in volume coming from the CME. However, sales on the NDPSR still humming along at what appears to be an elevated level. And then lastly, non-fat 119.83. We'll call that a full penny over the CME 1 week average of 119.10. We traded 11 lows on the CME. It's nice to see that the volume is returning here to the NDPSR. At this sub 120 level, the manufacturer able to move a lot of weight. 20.2 is certainly above our expected 20 million pound level. And all in all, relative to the levels that we're seeing at the CME, I'd have to call that a win for the manufacturer on this week's non-fat. So this is week 3 of 5. For the March pricing cycle, currently getting March class 3 at 1643 with March class 4 all the way up at 2010. If you carry current CME equivalents out through the 4-week April pricing cycle, currently getting April class 3 at 1575 with an April class 4 of 1990. Try and get outside and enjoy some of these clear, sunny skies. Until next week, I'm Joe. On behalf of Paige and the EverAg Insights team, thanks so much. See you next week. Bye.